Welcome to the Mortgage Rate Weekly Market Update for the week of May 14th, 2018. Hello, I'm John Thomas with Prime Residential Mortgage to give you an update. Well, last week, mortgage rates did end the week slightly higher than where they started. But take a look at the bond chart on the screen. You can see mortgage bonds are trading in a tight, it's kind of a wide trading range. You can see between the level of resistance and the floor of support. So we've been bouncing up and down. So last week we did sell off, hit the bottom of that trading channel. We're able to rally higher and end the week in the middle of the trading challenge with some momentum moving, with the bonds moving up. So we're going to recommend carefully floating your mortgage rate to start the week to see if mortgage bonds can build on that momentum and make a run at the resistance on that trading channel. Hopefully they can break through that resistance, which will move interest rates lower. So we're going to recommend floating. Now, if they sell off and challenge that floor of support, you may want to switch to a locking stance. If they break below support, you definitely want to switch to locking because they have a pretty good way to fall from there. Now, if we dig into the economic news, Friday, President Trump announced that he has unveiled a plan to lower drug prices. He titled that plan "The American Patients First." That was one of his campaign promises, so we'll see what actually happens. So the plan seeks to increase competition, improve negotiation, and create incentives to lower list prices of prescription drugs and out-of-pocket costs for consumers. So in the plan, some of the steps it outlines are rebate sharing in Medicare drug plans, promoting generics and copycat versions of biologic drugs, and requiring drug manufacturers to publish list prices for drugs in television advertisements. So again, we'll see if anything happens, if that goes through, and what that actually does affect American pocketbooks. But that was released on Friday, so we'll monitor that. A big report last week was Consumer Price Index, or CPI, for April 2018. That's a measure of consumer inflation. It rose 0.2%, which was just below expectations. The CPI, that reading is down from the high of this year of 0.5% recorded in January. So that was a very tame inflation reading. That's mortgage bond friendly news, so that helped mortgage bonds rally to end the week. And then we also saw tame inflation from the wholesale level with the Producer Price Index, the PPI, for April. It rose only 0.1%. So great news on inflation. Inflation is the enemy of bonds. So if it remains tame, that will help mortgage bonds rally and could move interest rates lower. Then we saw weekly initial jobless claims come out on Thursday. 211,000 claims, exactly the same as the previous week, at historical lows for weekly initial jobless claims. It supports a very good labor market. Couldn't ask for more on that, because remember, weekly initial jobless claims measures the number of people filing for the first time for unemployment benefits. So that's a great number there. Now in housing news, some more good news there. CoreLogic released its loan performance insights for February 2018. In there it showed that mortgage loans 30 days or more past due decreased from 5% of all mortgages in 2017 to only 4.8% in February 2018. Now, mortgage loans that are in some form of foreclosure also decreased from 0.8% in February of 2017 down to only 0.6% in February 2018. So great news there on defaults. Now, Chief Economist for CoreLogic, Frank Nothaft, said that delinquency rates would be even lower if it wasn't for the hurricanes last year, as people in those areas are still being impacted. For example, delinquency rates in February were 50% higher than in August of 2017 in Texas, and nearly double that in Florida. So those numbers we mentioned would be even better if it wasn't for the hurricanes. Now on the local news, the next first-time homebuyer seminar is this Saturday, May 19th in Newark, Delaware at the Christiana Hilton Hotel from 10 a.m. to noon. And then we are in Wilmington, Delaware, Wednesday, May 23rd from 6 p.m. to 8 p.m. And that is at the Independence Mall eXp Realty Office Suite 88. And then in June, we are in Dover again, Saturday, June 7th from 10 a.m. to noon at the Dover Holiday Inn. You can register for any of those events by just calling the office at 302-703-0727 or online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.